Hello everyone, happy Monday. Hopefully you had a great weekend and hopefully you had a great trading day today so far. I just wanted to go over the trades that I took overnight and explain my thought process and how I entered and why I exited where I did, just to show you how I trade, as well as explain why I wouldn't have longed where everyone else did this morning. All over my X feed today is just countless people that got on the long this morning after the open. Just one after the other, just nothing but posts. They're all taking the same trade. I can see why they would have taken it, in all honesty, right? All the same trade, essentially the same setup. And I don't bring this up to talk about, why I'm better than everyone else or, they suck. I'm just going to explain how I read price this morning heading into the open and why I would not have taken the long that everyone else took. All right, this is MNQ. And as you can see, I have my drawings and my trades on here. I took 3 trades overnight. A long, which I got stopped out at break even. I swapped it short, wrote it down, and then I got out of the trade. I actually got stopped out in profit. You can see I added long here again, added long here, and then I took it out over here. So at 333, I took a long here, and then at 335, I got stopped out at break even. So why did I think to take the long trade here? You have a 5-minute buy side imbalance, sell side inefficiency right here. Sweep of the lows, Asia's low. We have expansion higher. We have a fair value gap here that took out buy side. Then we have consolidation, go higher, and then we came down. I thought that this pullback was just a pullback to go long, and then I was targeting at least 419's new week opening gap. Now, if you're not familiar with ICT concepts, you might be asking, what is the new week opening gap? And it is the difference or the gap between Friday's close and Sunday's open at 6 p.m. at night. That is the gap. And I have it marked on my chart as a yellow box. And as you can see, I have it split also into quadrants. So we have the midpoint here, or consequent encroachment. And then we have the upper quadrant here. And then we have the lower quadrant right here. So I was thinking that this was just a pullback to go higher, and I was targeting at least the new week opening gap here. However, I got stopped out, and once I got stopped out, I actually added short right after. This was turning from a buy side imbalance, sell side inefficiency, a BISI, down into an inversion fair value gap. So here, normally it's meant to be used to long, right? So you would enter in this fair value gap and then write it higher. But once we got this move down and then we started consolidating instead of, quickly returning out of it, I was thinking that we were more than likely going to go lower. And I was looking at these relative equal lows there, sell side. But what I was ultimately looking at was this 2.5 standard deviation level. Now, how did I get this level here? Well, if you look at this, we have consolidation, manipulation that took out Asia's high, and then we had a quick displacement lower, small pullback, and then we had displacement lower continuation, and then we had consolidation or time distortion, and then we followed through to 2.5 standard deviation. In this case right here, this would be your manipulation leg. So if you take your fib that down, you'll get targets to the downside, and that is exactly where this retracement / reversal area is. That is also where I got stopped out in profit, because once we got down into this level, I trailed my stop into the profit because I didn't want it to take back majority of my profit from this move down. From this level, it could either retrace or it could reverse, which, in hindsight, now we know that it was a reversal. But that was my short trade. Now for the long trade, I'm going to show you how I framed that to the upside. I actually used this 15-minute fair value gap to frame the move to the buy side. So we have this small 5-minute fair value gap. That is the reason why I entered long here. And then we had this pullback here, fair value gap right here, I added there. And this whole time I had my stop below this 15-minute buy side imbalance, sell side inefficiency. The reason why I had it here is because I was anticipating this move up to continue. and not have a significant pullback before it ran higher. And then we had this continuation run higher, pullback, and then we were heading into the 850 to 910 macro. Before we even get into all that, I had this manipulation leg, or this distribution leg, I should say, mapped out for my targets to the upside. So the very same way that I framed the short to the downside, I framed the long to the upside. I didn't use this manipulation leg because technically this is the manipulation leg here. But if it's too large, then you can go off of the first distribution leg, which would be from this low to this high, which is why I have it fibbed there. That gives us targets to the upside. And then we have same thing, 2.5 standard deviations, just like we did to the downside. And then we ran to 3 to the tick, which is actually where I got out at. I got out a little bit before because I hit my profit target for the day. We went up to 3, pulled back to 2.5, and then we ran to 4. This is where I explain why I wouldn't have taken that long after 930. Like I said, I could see why they took it, because low, high, lower low, higher high, candle-wise at least, people were thinking that this inversion was gonna hold to go higher. This is like a breaker, right? Low, high, lower low, higher high. So pulls back and then goes higher. Me personally, if we hadn't hit 4 yet, I probably would have taken that trade. So like, let's say we hit 3 here instead. If we hit 3 here instead, and then we did all this, then I would get in long and shoot for 4. In hindsight, we rejected, went all the way down. Now, the reason why I say I would not have taken that long, knowing what I knew from the overnight session, is because we hit 4 at the 930 open. So the 930 opened, and then we hit that 4 standard deviation target, and then that was it. We started chopping. If you know how to use standard deviations and you can plot the sequence of price from the origin, then you would know that 4 is where you stop. Once it hits 4, you're supposed to get out. Take out most of your position, get out completely, leave some runners, right? Whatever you want to do. But once you hit 4, that is the completion of that move. You're supposed to wait for more information, more confirmation to see what price is going to do, because after that, then a new price sequence is, potentially going to start. Just out of curiosity, let's see if we could fib this. So 4 standard deviation completion here, right? So this is the highest swing point before we started reversing down. So what you could do is take your standard deviation or your fibs, fib that all the way down, right? So we have 2.5 here. So this is now your new retracement leg or retracement area. As we hit it, went up, and then we continued down to 3.5. We hit a line that I had from this fair value gap. Yeah, so if we plot that, you could see how precise that was. We'll make it like hot pink. So that's the low of that fair value gap. So we ticked it, quickly rejected, went higher. So we hit 3.5, and then we went back. So, I mean, you could do the same thing on this right here as well. 2.5. That's your retracement. All right. And then, so yeah, see now this, so we hit 3 here, pulled back to 2.5. So now I'm thinking we're gonna go over here. So this would be the end of the current price sequence that we are in right now, which would get all the people that were short since the open. And, again, once we hit 4, get out, wait for more information, see where the next move is going to start or where the next move is going. Either way, once it gets to 4, that is the end of the price sequence. That's the reason why I said after that, I would not have tried to long that. I would have just waited to see what price does first. But, if you had that information, or if you trade with standard deviations or Fibonacci's, then you would know that after this, after price is done from down here, it's more than likely going to sell off, right? And if I bring back the NWOG, if you split this into halves, So this is like the half of the quadrant. So I guess it would be octants, right? So if you look at this upper octant, look at the candlesticks, right? So there's your 930, hits 4, displaces down, comes up, failure swing, doesn't take out that high, hits the octant again, displaces, goes higher, bam. This probably, yeah, this is a short right here. Best case scenario short entry here. Then all the way down. One last thing that I wanted to highlight because this is important. Whenever you get a key level, whether it's a liquidity level or a PD array, especially if it's on a higher time frame, and you get a break through it with speed, anticipate that price is going to keep going there until it gives you a reason not to. So the reason why I added 5 over here is because if you look at the NWOG, the midpoint here, or the consequent encroachment, the halfway point, if you look at that area and see what price did through it, as we were approaching the 850 to 910 macro, so there's the break right here, boom, breaks through, keeps going. I added as we were getting into that macro, and then once the macro hit at 850, I hit my profit target, and then we hit that 3 standard deviation as well. That breakthrough, especially as it was using that 5-minute fair value gap as support. So here it's like an inversion. We used it as an inversion fair value gap to short. And then once we got back above it, right? Fair value gap here, entered long in there, added here, still didn't take out my stop. Went right back into this 15-minute BISI, barely. Displacement, pulled back using the first presented fair value gap from the 4-hour. Displaced through the midpoint, heading into the macro. So I added right before it ran and then got out with my profit and called it a day. That is it for me. I'll see you all in the next video. Bye everyone.